Have you ever looked at a deal and just felt that something didn't feel right? Well, we're going to talk about that today on the Furlough Capital Real Estate Podcast, where we dive into the intricacies of passive real estate investing. And our mission is to equip people to invest wisely with their guts, with their minds, everything, so that together we can build wealth while improving housing. And I know there's a middle section, but I can't remember it, and that's okay. That seems to be the new pattern. I can't say it all the way through. Anyways, we want to equip people to invest wisely with
I'm gonna
property and
say
people.
maybe you're sleep deprived.
Oh, I could be.
We got a new puppy. It's like newborn phase
Oh,
again.
my word.
And
It
also
is.
that feeling you're describing, I feel like is like when the puppy is not in the room and you don't know where it is, and you're like, I have this feeling that like he's
Right,
doing
right.
something he's not supposed to
Something's
do.
not right.
Something's
Yes.
not right.
Which thankfully right now he is on a little blanket right over there, chewing on a Kong. And so everything's good. So we can see him, so it's fine.
For
That may not
now,
last.
there are cords, and he loves
oh my
cords.
gosh, he
so.
does love cords, and I am very nervous because there's some XLR cables here that I'm like, well,
Yep.
chew on this, buddy.
Slowly but
Just kidding.
surely, he's
Here's
learning.
another weird thing I got going on with my life, which makes sleep deprived even better, is I end up getting sick,
Yeah.
and my ear is totally like, it got infected or something, and I can't hear out of it right now, which is one thing. And so everything's mono. But here's the other really weird part. Everything is slightly higher pitched now. So I feel like I'm talking like this.
So
And
strange.
yeah, it just everything. And I have to I want to lower my voice to make it sound more normal, but I know
Like
that
Batman.
that's not.
Like Batman.
Yeah, I'm Batman.
You're Batman.
But I'm like, I don't know. I feel like I'm talking really nasally. I'm like, oh, I'm not, but
So funny.
it's so weird.
The weirder thing is I also got sick. I think we shared this germ.
Happens.
I can't hear out of the same ear, and yet the filter that it gives me is more bass.
Oh,
So
man.
it's just weird. Just
Okay.
it messes with your auditory filtering or something.
It does.
Just
This
like
guy
Chuck is messing
Messing with the set.
He's messing with the set.
It's all good. That's right. What I actually want to talk about, I'm so nervous. What I actually want to talk about is red flags, right? So sometimes you're looking at deals and it looks good until it's not, right? And so like maybe you've got something, you're like, oh man, it's a really strong IRR. And it's in a great market, got a solid team, but like something just feels off.
Mhm.
And so it's not always that it's not always that a deal is going to be obviously bad.
Mhm.
And honestly, if a sponsor's doing right, they're going to make it look good.
Sure.
And so you gotta so there's some subtle flags that you got to pick up on. And so I want to talk about 7 signs that the deal may not be right fit for you.
Mm.
So it's not necessarily that it's a bad deal. It's just not for you. Does that
Sure.
make sense?
Yeah. And yeah, because there might be certain specifics that just don't work for your finances, your
Right,
timing,
wherever you're at.
or whatever.
Yeah.
So we'll talk about the 7.
Should be 7. There
subtle
are 7.
red flags. Okay. 7 subtle red flags. It's like a tongue twister. So starting off with this first one is, let's start with the most basic one, not understanding the business model. So if you don't fully understand the business model, why is that so dangerous as a passive investor?
Yeah, so I had this situation where I'm looking at a 6-plex right now, and it's an interesting deal. It's owned by a nonprofit. They're looking to just offload it. One of the units has some significant foundation issues. One of the units is in like perfect, ready to rent condition. The other ones are all in various stages of readiness. And I'll be honest, it took me a super long time to wrap my head around, like, what are we doing with this thing? How are
Interesting.
we making money?
Yeah.
And part of it was I was gone, and so my partner looked at it alone, and he took some pictures, but like, I don't know. I was struggling he just knocked himself out. He was struggling. I was just struggling to wrap my head around, what are we going to do to make money? Is this a flip? Is this a long-term hold? Are we doing something super creative? Is this a straightforward thing? Like, I just couldn't figure it out. Like, okay, it needs a new roof, so it's going to need some capital up front. So it feels like a flip.
Interesting.
But are we going to refinance it and burr it? It's 6 units, so it's technically commercial, but there's an existing loan on it. That part of it is assumable. And so there's a whole bunch of different factors that, for me, I couldn't wrap my head around it. I was like, intuitively, I'm like, there's a good deal here. I know it's a good deal because they're asking way under market value, but is it? Like, what would have to happen to get it to be where it needs to be? Like, I was struggling to wrap my head around it. And I think that can happen as a passive investor. If you're not able to, let's just say, succinctly write in a paragraph, here's the plan for this thing.
Yeah.
Right? Where we've done flips, right? Hey, we're going to take this home that's not in great shape. We're going to invest a bunch of capital, make it better, resell it. Boom. Easy. You can explain that very simply. Or, hey, we got this multifamily property and it hasn't been managed well. So we're going to go in, manage it better, make some minor repairs, and just, increase that NOI over time. Very easy. Okay. And you want to be able to explain things as the passive investor. You want to get to that point where you go, yeah, I understand it. And if you can't, it may not be a good deal for you.
Yeah, which totally makes sense to me. It's like if you had a plan, even to just...
Oh, that camera's where it is now.
If you had a plan, even, not even to do like a business deal with, like if you were going to spend a large amount of money,
yeah,
you would want to know, like, what is this being used for? What is it going to get me?
Yeah.
How am I, how is money going to get back? Where is it going? What am I getting for it? So that kind of, it's like, I understand why this is the most basic one.
Right.
Which if you can't see line of sight to like, I'm giving you my money and then you're going to give me, XYZ return.
Yeah.
And you're going to do this with the property. Perfect.
Yeah.
Got it. Then that should be a red flag.
Yeah.
So perfect. This one to me is very interesting. What if the sponsor, like, if they are uncomfortable and kind of avoiding some questions that you're giving them?
Oh, okay.
Like, how do you spot that as a red flag?
Yeah. So sometimes, like you said, they just kind of avoid the tough questions, right? They're either they redirect, or they get defensive, or their answers seem overly optimistic. Don't worry about it. It's going to be great, which I got to be careful of. And so what you got to do in those situations is you really got to press for the, like, what happens if something goes wrong? Like, ask those types of questions. And you're interested not just in the answer itself, but the tone of the answer. Again, are they overly optimistic? Are they defensive? Like, are they just being too extreme on it? And that might be a situation where, like, all right, there may not be something here, but I don't know if the sponsor knows it.
Interesting. Okay. Yeah. You've got to push a little bit, which is why you created, I feel like it's one of the reasons why you created that document with all the questions.
Yeah.
It's like
good deals only, due diligence checklist. Check it out for Furlough.com.
Exactly. You can ask, and if they don't have answers, that should be a red flag.
Yeah.
So even if you're not quite sure what questions to ask, then
but I would say in general, if you're, ask some downside stuff. Hey, what happens if this risk
that makes
happens?
sense.
Whatever.
That makes sense. Another subtle red flag could be if you're feeling kind of rushed. So let's talk about urgency. Like, why is that? Like, you're feeling like, I got to make a decision. I got to move forward. I got to do something. Why is that a red flag?
Yeah. Which, for the record, sponsors like myself try to do.
Rush?
We want to create that feeding frenzy. Hey, you're going to miss out if you don't get in
sense of urgency.
Yeah, that's fair. And so like, things are set up that way on purpose. Part of it's because I don't want people spending forever trying to analyze it. I'm like, look, either it's a good deal, either it makes sense or it doesn't. Yeah. And so, Ocean's 11, right? Either you're in or out right now. Not quite that bad, but pretty close. And but for you personally, that may just be like, oh, dude, I can't do this in a week. If I'm like, I need the funds by Friday. Like, if you're not ready for it and you're gonna twist over backwards to make it happen, and it's twisting you up in knots, like, dude, just wait. It's okay. Like, there'll be another one out there. Get yourself in a position where you could potentially pull the trigger fast, but that's also okay.
Yeah, that kind of makes sense to me. It's kind of like to mitigate this potential red flag. It's like things you've said before is determining your criteria so that you can recognize a deal and take action fast.
Yeah.
So that it's not in the middle of it. You're like, is this good? Is this what I want? I don't know.
Yeah, and you might set some rules, right? I never invest in less than 7 days.
Yeah.
Or whatever.
Sure. I know that we've done that before, not necessarily even in real estate. but we've set a timeline, and it's like a timeline or a comfort line almost. And it's like, if this doesn't feel right, even though it seems like a great deal, like we will pass, and that is okay. And that's hard. You know, if you're like, but there's potential, there's something. It's like, but if the timing is not right, if it's not the right deal, like that is okay.
Yep.
It's okay to say no.
Yep. 100%.
So this next one is it's like covering up the camera. This next one is about poor communication.
Yeah.
What does it tell you if the sponsor is like silent? If they go silent or they're vague about their answers?
Yeah, which again, like, that's not necessarily a very bad thing. It's just indicative of how it's going to be the rest of the time. I know I've invested in deals where I send out emails and like they just never get answered.
Yeah.
You're like, man, I kind of want to know an answer to that.
Yeah.
And, and I get it, right? Like, to some degree, sponsors are busy. They're doing stuff. They're not just sitting on their email, and I don't want them just sitting on their email. But I'm also like, man, if I send a follow-up and they don't get back to me,
right?
Like, come on.
Like,
and for me, it's like, I'm not expecting within 24 hours. I am like within a week would be nice.
Is that like a general time frame that's acceptable? I mean, because to me, I'm like,
Depends
a
on who it
week?
is.
That's crazy. Like 24 hours doesn't seem unreasonable to me. Not to get...
It depends on what it is, right? If you're... Okay, all right.
Not
on
to
what
get a full answer.
If the investment's already gone on, and now you're like, hey, I'm looking for an update to do something like that.
Sure.
Yeah, take a week. Get back to me. I don't care.
Interesting.
Like, but if it's, hey, I'm thinking about investing in this thing, and you've asked for money in the next 2 weeks, and you take a week to get back to me,
that's like,
or 24 hours even.
Yeah, you're kind of squeezing my timeline.
And so you just want to pay attention to that.
It depends, but...
Like, because I know when I'm actively fundraising, like, I pick up, like, my next available opportunity.
Right.
I'm calling back or replying or whatever.
Yeah.
When we're in the middle of a deal, I slow down a little bit. I'm not like Johnny on the spot. And usually they're asking a little bit more complicated types of question. I'm like, okay, I actually got to, let me get an update on this and figure it out. Like for the lot that we're splitting, that's when I had someone ask me a question about it. I was like, man, I don't actually know. And so I had to talk to the surveyor, figure out from there. And it took me a couple days to get it. And then I was able to answer the question.
That makes sense.
I guess if I were absolutely perfect, I would send out the initial note. Hey, got your question, working on it.
Yeah, that's what I would expect is like not necessarily an answer, but
it's hard because I'm kind of like, when I get that question,
on it.
I'm usually like, I'm forwarding it on pretty quickly to the next person. And I'm like, man, they get back to me quick. Like I'm within that time frame.
Yeah, you're kind of.
So I don't know. It's
debating.
It's weird, which is why, again, if you're in the middle of investment, like it's okay if they're a little bit slower. But man, when you're evaluating a deal, man, they probably should be pretty on top. And if they're not, that either means A, you're not important, B, the investment isn't important, or C, like they don't know the answers.
Yeah.
And so there's all sorts of things where you're like, all right. Yeah. And so, and I would test it. This is something I didn't do well, I think, on one of mine, was I didn't send an email to the guy in charge. I was talking to someone else, and he was responsive and still is responsive, but he's also like, I don't know the answers.
Right.
And it's the other guy.
He's not
and
necessarily
so in retrospect, I should have sent a message to him just to see. And I have a hunch he would never have responded. And I'm like, that's weird. I probably could have gotten talked into it anyways, because the other guy would have sold me on it. But
sure, interesting.
Yeah, I don't think he knew either. So, which is another red flag, I guess.
Yeah. Yes. All right. This next red flag, you can't clarify the downside scenario. So this one's kind of big, not understanding the downside. What should passive investors be looking for here from a sponsor when they're trying to clarify, like, well, what is a potential downside?
Yeah, so it's kind of related to that other one we talked about, like if you're asking them tough questions. And it's also kind of the understanding the business model, right? Like part of that understanding and asking tough questions is like, man, what happens if this doesn't perform as expected? Like, what are we gonna do?
Right. What's the plan B or C?
Yeah, exactly.
Doesn't work.
And you want to ask stuff like, well, okay, in that situation, like who does get paid first? What is the exit plan? Do we have other options that we can do to try to minimize the damage here? And so I think, especially in this environment where there's a bunch of unknowns from a macroeconomic standpoint, which I feel like we've been saying this for 10 years, but whatever, it seems more dynamic at this point. I think it's important to know, yeah, you know what? If interest rates do end up skyrocketing on us, what are we going to do about it? Or whatever. If material costs go up big time, what's going to happen? And so if you can't articulate it, if you can't understand it, or it doesn't even seem like it's addressed, yeah, that's a red flag.
Yeah, that totally makes sense. Knowing what questions to ask and knowing that your sponsor's not avoiding the hard things.
Yeah.
It's a good thing.
Which honestly, with like tools like ChatGPT these days, like, dude, feed it the document and have
That's
it.
true. Is there anything in here?
Yeah.
It looks weird.
Are there risks? Anything I should be asked about? And like, it's pretty stinking good at like, it may not come up with the answer, but it's going to give you places to look.
Yeah.
It's fantastic at that.
It could probably help with this next one too. Feeling like the terms are lopsided.
Yeah.
What do lopsided terms look like even? How do you tell if someone is like structuring things in favor of themselves too much and less in your favor?
Yeah. Yeah. No, exactly.
Excuse me.
And that should show up in returns and stuff, and how those numbers look.
Yeah, if you're like, the sponsor's getting 90%.
Yeah.
I'm like, I'm getting 2%.
Which
like,
would never happen.
That's a little extreme.
But and you just want to watch out for both, right?
Yeah.
Because you could have at the other end where the sponsor is essentially paying them nothing until the very end to make the numbers work for the investors. Like, we'll give you all the money because you get a better IRR, which is great. But then they're going to want to terminate or complete the investment a lot faster, so they finally get paid.
Yeah.
Which,
I mean,
as long as you know it,
sure,
that's fine. But yeah, you want to make sure that that they're not getting paid first. It's a close second. That there aren't a lot of heavy upfront fees. So typically, like, an asset management fee is going to be somewhere in that 1% to 3% range, depending on what it was. There's going to be an acquisition fee that's also going to be in that 1% to 3% range. They usually are going to have some sort of, the splits can be a little bit more complicated. If it's a straight split, the sponsor's going to get somewhere to 20 to 30%. If there's a waterfall, you might have the investors getting a preferred return somewhere in that 6 to 10% range first, which means they do get all of the money, except for whatever, if the sponsors put in capital, they're part of that initial group. And then there might be a split afterwards that, again, might be that 20 to 30% goes to the sponsor up until some overall return, like an IRR of 15% is hit. Then it might go to like 50-50 or something like that. We got a whole episode on waterfalls and how complicated it can get.
Yeah, I remember.
I recommend checking it out.
Chasing waterfalls.
Yep, that's the one.
Yeah.
And so you just want to so I just rattled off some high level ratios.
Yes.
Just so you can, because I want you to be able to look at it and kind of go like, okay, all right, I kind of got an idea.
So I'm wondering, this follow-up question I'm in my brain is like, okay, is there like a spot or like a resource where I can go that's like, these are the general types of terms that you should be looking for? Or is it like way too much of a range to do that with?
It's a little bit of a range.
All right.
I think. Yeah.
Because there's
what
averages and there's some returns. Sure.
Yeah.
I'm just like, I'm so visual. I'm like, man, I wish there was like a spreadsheet.
I've got my check marks.
Like
I want an IRR that's in the 14%. I want a cash on cash that's in the 7%. I want an average annual return that, what is that number? I don't know. I got it written down. I feel like that's a little bit higher, maybe in like the 18, maybe 16% range. And then your equity multiplier. And those are like the 4 big measures.
Okay.
That one, you want at least 1.5. It's usually going to be in like the 2x range. Yeah. But there's no time value of money. So like, for example, I got a deal that like, we're going to hold on to it for the long term. And it's got an equity multiplier of like 3.5. So I'm saying we're going to take your $100,000 and turn it into $350,000, which is amazing.
That's incredible.
It's like also over 10 years.
Yeah.
And so the IRR is like 13, 14%, because it all comes at the very end.
Yeah. It is, I mean, it is helpful to have those rules of thumb because otherwise you don't know how to evaluate things. You don't have anything to compare it to. And so you're like, I have no idea if this is lopsided or if it's a good deal or a bad deal.
Well, that's part of it too. If you're not sure, like, look at a bunch of deals, right?
Yeah.
When we first got started, right, we looked at 100 homes in the market.
That's true.
And the entire point of that was for us to get a feel for what the numbers were.
Yeah.
Right? Doing comps.
Get really good at identifying.
Doing it as a passive investor can be a little bit hard unless you have multiple sponsors that you're working with.
Sure.
So
you can, I
or
mean,
you
I would
listen
imagine,
to stuff like us, and we give you the guidelines, and then
Yeah. or I would imagine you could ask your sponsor for some comps, and hopefully you
Yeah.
could trust, the information that they're
yeah,
giving
yeah,
you. So.
yeah. But that's a red flag, right? It just
Yeah.
feels like, I feel like they're.
Yeah, it's like, if it seems like this is too good to be true for me, or why is my sponsor getting paid so much? It's like,
yeah.
either way.
Lopsided
Yeah.
in some direction. Yep.
Yep. All right. Last but not least,
Yeah.
if you just have that weird spidey sense
Mm.
of like you feel something's off, but you can't quite pinpoint it.
Yep.
How seriously should you take that as a passive investor? If something's just like
very seriously, because at the end of the day, you're getting into a longish term relationship, depending on what it is, right? If you're passively investing in a flip, all right, it's less than a year. But
Yeah.
if it's a syndication, that's a 3 to 10 year
Yeah, it's a commitment.
commitment, right?
Mhm.
And so if there's something off, it's worth listening to,
Mm.
and it'd be nice to be able to identify what that is
Right.
and articulate it.
That was my next question was like, well, how do you mitigate that? Like, do you just be honest with your sponsor and you're like, something feels off. I don't know what it is. But
You could do that. Another one is go to another investor who you know is kind of a veteran
Mhm.
investor and say,
That
hey, I'm
makes
looking at
sense.
this deal. Like, I can't tell. Am I being overly cautious and too picky?
yeah, what
or
do you see here?
is there something here that I need to ask about? And
That makes
I mean, I
sense.
love looking at deals. And I've had people do that, not for bigger ones, but for smaller
Sure.
ones. Hey, James,
Am
check
I
out this.
missing something?
Yeah,
Yeah.
look at this thing. And I love walking people through that. And I usually I'm like, yeah, here's my framework. Let's go
Mhm.
through it. And I'll run through the numbers and I'll say, okay, here's kind of what I'm looking for, blah,
Yeah.
blah, blah. And that usually helps them kind of figure it out. And as a general rule, the answer was, yeah, your gut was right. It's a marginal deal.
Mm-hmm.
So, and you're trying to justify it and you know it.
Mm-hmm.
And I'm usually like, yeah, like,
Oh yeah. I mean, we've all been there before when like I think it often comes up when we when we want to overspend on something or indulge in something and it's like,
Yeah.
this seems like it'd be really fun or really good
Right,
or have an
right.
upside, but now's not doesn't make sense for some reason or another. And we
Correct.
try and justify it. So
yep.
yeah.
I have that struggle with my food every day.
paying attention to the gut feeling.
Yeah, so those are the 7 different red flags.
Nice.
Again, just to kind of review them, it's if you don't fully understand the business model. 2, the sponsor is avoiding tough questions. 3, you just feel rushed through the process. 4, you get questions and they just go unanswered or delayed. 5, you just can't seem to clarify or visualize what that downside scenario is. 6, the terms feel lopsided. And then 7, just something feels off on your gut. You can't explain it.
Yeah.
Those are the red flags to be looking out for. And again, it's not just that you're necessarily looking for a good deal. You're just looking for the right deal for you. And that's what some of these are. It might still be a good deal for someone else, just maybe not for you. And so if you do want help, as we've already mentioned a couple times, figuring out what are those questions to ask and what are those areas to look into, I've got a really sweet due diligence guide. It's called Good Deals Only. So you can tell what we're going for. And good deals for you only. And so you can check that out on our website at furlough.com. You can also learn more about us and our investment thesis and the types of deals that we offer, both short-term and long-term. But yeah, that's what we got. So super fun
Yeah.
type of stuff. Sweet.
Works.
Thanks for listening and have a great day.